Hi, everybody. Scott Riley, the Market Update Desk, brought to you by Mortgage One. It's May 29th, midway through the week. We're starting the day in the red between both stocks and bonds. A couple of things are the reason for that and the causality. So, number one, we had a pretty below average response to the 2 year and 5 year bond auction yesterday. The bid to cover ratio wasn't as good as expected on both those bond auctions, and the institutional appetite for those bonds with the prices that were out there just weren't where they needed to be to end up being a positive for the market. Now, that, along with a stronger than expected consumer confidence number late yesterday, has led to some bearishness in the market. Specifically, within the consumer confidence, besides the fact that it was significantly higher than expected, which is definitely a surprise, the respondents of the survey gave a indication that they expect inflation to continue to be pressured to the upside. Now, those negatives gave us cause for a couple things yesterday. Mortgage-backed securities, we expected the 200-day moving average to hold because it's been a very strong barrier on the mortgage-backed securities. And on the 10-year Treasury, we expected the 25-day moving average to give us some topside protection. Both of those things went the opposite of what we would have expected. Even though those were very strong support levels, they both got broken through. What that led to is some pressure on the upside to mortgage rates. Now, as we go forward in the week, everything's really going to revolve around Friday with personal consumption expenditure. We are expecting on the core PCE to come down by most likely a tenth. The reason for that is the replacement value for last April, was about 0.32 that we're dropping out of the calculation. And the market is forecasting about a 0.24 replacement value for April this year to come into the calculation. Now, obviously, there's a lot at play that could change that. Unexpectedness, the BLS, as always, can throw us a curveball with unexpected numbers. Let's hope we get at least that tenth better in the core. That's going to give some positive reaction in the market. Then also on Friday, we'll start the Fed's Treasury buyback program, which could ease some inventory problem of all the treasuries that are out there being sold off. Now, tomorrow, we do get potentially a little bit of a positive. We get second quarter look GDP for first quarter, second look GDP. Now, big question is the downside to the retail sales that we've been seeing. That could help us in that retail sale, in that GDP number. Let's hold on and see what we can get. Thanks for watching. The Market Update Desk is your original singular market news source for the West Michigan area. Thanks so much. Have a great afternoon.